Hello friends, this is Rajat Badaya. Here I am going to give you a brief about GST, its applicability and how it will work on Indian market. In this video, I will give you only an introduction about GST, and in upcoming videos we will discuss each and every aspect of GST in detail. So let's start. What is GST? GST is Goods and Service Tax. Its name in itself says it's tax on each goods and the services. GST is an indirect tax which would levy on the goods and the services and those things which are out of coverage of the goods and service, then GST would not be levied. Although each and everything has been covered under goods and the services, but few products has been removed from the ambit of GST. These are alcoholic beverage, petroleum products, real estate, and electricity. So, in the current phase, GST is not going to be levied on these four products. First of all, I want to clear few misconception and the myth about the GST that a normal person have. This is that GST is single tax and the single tax rate. So many guys thinks that GST is a single tax that would be levied on the goods and the services in the upcoming tax regime, and there would only be a single tax rate. No, there would be three taxes. There would be central GST, state GST, and integrated GST that we would discuss a little bit later. And there would not be a single tax rate, there are going to be three tax rate. First of all, merit tax rate, normal tax rate that is called as standard tax rate, and the third one is demerit tax rate. This also we will discuss later. Now I wanna tell you the importance of the GST to various segments. It's important for the students to enhance their knowledge that can help them in their upcoming examination because GST can be part of their syllabus. And then chartered accountants and the lawyers. They also have to know about GST because they have to meet the compliance criteria of their clients in the industry. Industry should also know about the GST because they are the actual person for whom these compliances have to comply. Now, if we are talking about the freshers, yeah, if you are chartered accountant and you are fresher and if you have knowledge about the GST, then it can give you few more points during the interviews because each and everyone have knowledge about the AS, Companies Act, direct tax, indirect tax, but everyone doesn't have knowledge about the GST. So, knowledge of the GST can help you guys to crack the interviews and other segment of people. It can be any engineer, any MBA, or any other person or a common man. These guys should also know about the GST because each and everyone should know about the economy and what's the major changes are undergoing in economy. Now, if I want to tell you the benefits of the GST, then there are lot of benefits. Let's talk about them also. In the GST, various indirect taxes are subsumed. In GST, subsumed means they are eliminated and they are merged in the GST. So various central indirect taxes as well as the state indirect taxes has been subsumed or will be subsumed in GST. If I will name these taxes, then there are excise duty, custom duty, service tax, VAT, entertainment tax, luxury tax, and so many taxes. But basic custom duty has not been or will not be subsumed in the GST rate. Although CVD 31, CVD 34, CVD 35 special or additional custom duty will be subsumed. Now the topic arises whether the cess will be subsumed or not. So cess is a little bit different from the tax, because if the government is collecting any cess, then it had a specific purpose. If the government is collecting tax, then it can be used for any purpose, but the cess, money collected under the cess would be used in a particular purpose, like education cess, second and higher education cess, clean energy cess. So the clean energy cess, the amount collected under this cess would be utilized only for the clean energy, having a particular objective. And if you talk about the Swachh Bharat cess, then again this says the amount of the revenue collected under this says would be used in this for this purpose, Swachh Bharat. So the GST Council said that the cess will also be subsumed under the GST rate. GST would encourage the transparency. It will bring transparency. How? There would only be a single structure of the taxes, single structure of the indirect tax. So everyone would have clear cut idea about the tax regime, how tax going to be levied. There are no various sort of taxes, so it will bring transparency. And one of the thing that I want to tell you, that in GST there is lot of importance and a lot of role of the IT, information technology. So the structure of the GST, the system of the GST, the software of the GST model has been prepared in this way that that would improve the transparency. There would be same rate of tax in whole country. What does it mean? Yeah. You can think that on a particular product there are various tax rates in the different state. If you are talking about the VAT, then it may be possible that the rate of VAT on a similar product is different in different states. But now under the GST, those rates would be same. So few things can be reduced, like someone purchasing from the Delhi and selling it in the Rajasthan. These things would be removed or the eliminated. There would be possibility of the reduction in the tax evasion. Like if I told you that there would be single rate of tax, so these sort of activities can be stopped, like purchasing from the one state and selling the another state. Basically these activities lead to or with the intention of tax evasion, but if there would be no scope, then the tax evasion can be reduced. And the one more thing, GST system is prepared with use of lot of technology, high technology. So there would be a transparent system. And like if I will say about the input tax credit, so there would be, when the supplier will give the information about the sales, then the recipient would give information about the purchase, and these going to be matched with each other. So technology also plays a major role in reduction of the tax evasion. And if I talk about the GDP increase by 1 or 2%, yeah, it's the information in the market that the GDP would increase by 1 or 2% when the GST will come out in the tax regime. How? Yeah, GDP can be increased because there would be transparent system of taxation, and there would be lot of certainty. It indicates that the foreign investment can also come in India because they have to comply with l- lesser number of tax laws. And one more thing, that earlier the tax threshold of VAT, service tax, excise was different. So only few number of person can be registered under that tax laws. But now under the GST there is only single threshold. If a person is registered under VAT and the service, a person is providing service as well as selling the goods, he had to take a single registration. Otherwise in the earlier tax laws he have to see his turnover differently. turnover for the goods in different manner, for registration of the tax and and the turnover of the service in the different manner, while taking registration under the service tax. But now he have to combine the turnover, and the registration threshold has been reduced for the excise. So more registration would be there. When the more registration would be there, then the data for the GDP can be increased. So earlier there were a lot of people who were not taking the registration, and their data is not included under the calculation of the GDP. Now it will be calculated. Now it would be considered as well. So GDP can be increased by this way also, and it reduce cascading effect. I know our VAT is also did a lot for removing the cascading effect, but it doesn't remove cascading effect fully. Because if you are selling the goods interstate, if you're selling the goods interstate, then the CST would be levied at the rate of 2%. And the credit of that 2% is not allowed. And again, when they will sell the goods, then again they have to tax on that 2% also, because that CST 2% becomes a part of cost. But now in the GST there would be no central sales tax, no these kind of taxes. So I think it will reduce cascading effects as well. If we are talking about the coverage of the law, then this law covers entire India, including Jammu and Kashmir. In the present regime, the present structure of the service tax, Jammu and Kashmir was not in the ambit of service tax. So now this has been in the GST. The GST would be extended to Jammu and Kashmir as well. So it's a part of India as per the definition. GST is tax on the goods and the service with value addition at each stage. It's the same concept as we applied in the VAT. If you are selling the goods of 100 to another seller, or the buyer who gonna to be sell to another third buyer, then he will collect tax only on the additional amount. No, he will collect the tax on the full amount, full sale value, but the actual burden would be only on the value addition. Let's say if Mr. X sells the goods for 100 rupees to Mr. Y, and the tax, suppose tax would be rupees 10 only. Okay, so on the 100 at the rate of 10% there is 10 rupees tax, and Mr. Y gave Mr. A 110 rupees. Now Mr. Y going to be sell this product to Mr. C for 120 rupees. Now he will charge tax at the rate of 10% on 120, that is 12 rupees from Mr. Z. But the actual burden is only 2 rupees, and that is 120 minus 100, 20 rupees into 10%, that is 2 rupees. How this is the actual burden? Because when he will collect 12 rupees from the Mr. Z, then again he will take the input tax credit of the 10 rupees that he have already paid to Mr. X. He will deposit 2 rupees to the government, and the Mr. X will deposit 10 rupees to the government. Government will receive 12 rupees, and this 12 rupees is on the 112. So Mr. Y collect additional amount of tax only 2 rupees. So this is an value addition tax, like tax on only the value addition part. GST is destination based consumption tax. What does it mean, destination based consumption tax? Destination based consumption tax says that a tax would be charged by the government or the state in which goods has been consumed. So if Maharashtra is producing a goods and the Delhi is buying the goods, so tax would be collected in the Delhi. Amount will go to the Delhi government. And when we will say the amount will go to the Delhi government, it's mean that in the GST there would be two component, SGST and the CGST. And the item SGST will go to the state government, and those state governments in which goods or the service is actually consumed, So there will be loss to the producing states because earlier the producing states levy the VAT on the sale and the state got the revenue, but now it's a consumption basis, so the benefit will go to the consumption state who is purchasing the goods or who is consuming the goods. So in the initial stage, central government will compensate to state governments for the first few years. Now there are three types of the taxes: SGST, CGST, and the IGST. When we will sell the intrastate means within the state, then SGST and the CGST would levy. SGST denotes state GST and the CGST denotes central GST. So the component of the SGST will go to the state government and the component of the SGST will go to the central government. But when interstate supply would happen, then the seller would charge IGST. It's the integrated goods and service tax. So when there is interstate supply, then the IGST would levy, and this IGST rate would be sum of SGST and the CGST. It will include both, and then the state, it will go to the state government. IGST will also go to the state government, and st- IGST will go to the central government, and then the central government will discharge the amount of SGST to the respective state government in which the tax, in which the goods or the service has been consumed. So earlier that we said that it's a destination based tax, destination consumption tax. So like this, the amount will go to the respective state government. In case of import, there would be charged basic custom duty plus integrated goods and service tax. As I earlier said, basic custom duty will not subsume under the GST currently. It may happen in next few years. So as I told you earlier that there will be three rates of tax, not a single rate. So these rate of tax has been defined as merit rate, standard rate, and demerit rate. Merit rate would apply on the essential commodity, although these rates may vary, but these should be within this range, 10 to 12%. And the standard rate, the major goods and the services would cover in this rate, standard rate, that would be approximately 17 to 18%. Lot of the goods that we purchase in our routine would be covered under the standard rate only. And the demerit rate, it's a higher rate, it's a 40%, and it's applicable on sin goods like luxury. Now if I will give you brief about few definition. First of all, I am giving definition about only goods and the services because this is GST, goods and the service tax. So at least you should know about what is the goods and the what is the service and what's the coverage of the GST. Because until and unless you don't have idea about what comes under the goods and what comes under the service, you will not have any idea about the GST. So first of all, I want to give you or tell you about these definitions. Goods. Definition is under section 2. So definition says goods means every kind of movable property. First of all, it should be movable property other than auctionable claim and money. Auctionable claim and money is not covered under the goods but includes securities, growing crops, grass and things attached to or forming part of the land which are agreed to be served, which are agreed to be severed before supply. So this is the definition of the goods, and there is an explanation. For the purpose of this clause, the term immovable property has not include any intangible property. Sorry. For the purpose of this clause, the term movable property shall not include any intangible property. So any of the intangible property would not cover under the definition of the goods. So basically each and every movable property is the goods except three exceptions that I highlighted in the yellow color. These are auctionable claim, money, and intangible property. So another thing, Now come to the service. Service means anything other than goods. It's an open-ended definition. What do you mean by open-ended definition? It's a wide coverage. These two definitions cover each and everything. It simply says whatever not the goods, it would be service. Explanation has been given that services include intangible property, actionable claim, but does not include money. So if I will think about it, I will think about these three terminologies. Auctionable claim, it has been covered under the services. Money is not the part of the goods as well as the service, so it's not going to be covered under the GST. But if I will talk about the intangible property, then it's not the part of the goods, but it's part of service. So only the money is the thing that's not covered under the goods and the services. Now the one thing arises. Anything that is immovable is gonna to be service because mm, goods says the movable property, every kind of the movable property, and the services means anything other than the goods is service. So if there is any immovable property, then it would be service. Okay, now come to the part of registration. How there would be the requirement of the registration under the GST model law. Any person having aggregate turnover rupees 9 lakh or rupees 4 lakh for the person carrying out the business in the northeast states including Sikkim across all locations in India will need to obtain registration in the state from where they make supply. Now the things arise. What does it mean by the aggregate turnover? Aggregate turnover includes taxable supply, non-taxable supply, exempt supply, export of goods and the services, but does not include material supplied under job work on behalf of principal. So when we are calculating the limit of 9 lakh or the 4 lakh, we have to take all these sales, and if it increase by 9 lakh and the 4 lakh, then you have to take the registration within the 30 days. There are few more conditions we will discuss in the detail later. So, and one more thing that we have to check these limits for all location in the India. If a company having operations from 10 states, then for the purpose of calculating this limit or this limit, we have to aggregate the turnover of all the locations. And they have to obtain the registration in the state from where they make a supply. It means if a company is having operation or make supply from 10 states, then they have to take registration in all 10 states. This is the limitation, but this was necessary. I know in the few companies having operation in almost all the states, and they have to take registration in each and every state. They have to file the return from each and every state, but this was necessary because there is a component of the SGST in the tax regime, so they have to take registration in each and every state. In addition, the following person would be required to obtain GST registration irrespective of the turnover. These are the list of the person those have to take the registration whether there is turnover is 9 lakh rupees or the 4 lakh. It doesn't matter whatever their turnover, but they have to take the registration. These are the person making interstate supply, person who are making interstate supply from one state to another state. They have to mandatorily take the registration under the GST. In these person would also not be covered under composition scheme. Composition under the GST, the composition scheme is those person having the aggregate turnover up to rupees 50 lakh can avail the composition scheme, and in the composition scheme minimum tax rate would be 1%. Now the casual taxable person, these are the person who casually supply the goods or the services. They are not regular suppliers. Person required to pay tax under the reverse charge. So person who has a liability to pay the tax under the reverse charge, they have to mandatorily apply for the registration. This condition was same as earlier in the GST, no, earlier in s- service tax. Person making supply on behalf of other registered taxable person, whether as agent or otherwise. So if a person is supplying on behalf of another taxable person who is registered, either he is agent or in any other position, then he will have to mandatorily take the registration irrespective of the turnover. Input service distributor. This concept is same as the service tax. Input service distributor distribute their input credits to their branches. So they have to mandatorily take the registration. They don't have the turnover, but they have to take the registration. Then only they can distribute their input credit on the service component only. The main thing is only they can distribute input credit on the services, not on the goods or the capital goods. Person making supply accept branded service through an e-commerce operator. So if a person is registered with the e-commerce operator, then he would mandatorily be registered under the GST. But if he is supplying the branded services, then he is not required to register. The e-commerce operator in itself have to apply for the registration irrespective of the turnover. Aggregator supplying service under GST, aggregator supplying service under his brand name. So if an aggregator is supplying services on his own brand name, then he had to mandatorily take the registration irrespective of the turnover thresholds, and the non-resident taxable person also have to take the turnover. Sorry, non-resident taxable person also have to take the registration. Every supplier shall take registration in each state from where he make taxable supply of goods and or the services. So now each and every supplier shall take registration in each state from where they make taxable supply of goods and services that I discussed earlier in the beginning part of the registration. Now the terms arise. Supply. Supply is a taxable event under the GST. What does it mean by the taxable event? Taxable event means that if the definition of the supply would meet, then only GST would be levied. And it includes sale, transfer, barter. Barter earlier was not under the coverage, but in the GST, barter system is also covered under the service under the GST. Exchange, license, rental, lease, disposal, made or agreed to be made for consideration in the course of business or furtherance of the business. These all things should be in the course of business or furtherance of business. Either it should be a regular part of their activity of the business or it can be for the growth of the business. Import of service is also a supply. If there is import of service, irrespective of the other condition. What are the other condition? Whether there is consideration or not, whether it's in the course of business or for the furtherance of business or not. Import of service would be deemed to be supply, irrespective of any condition to be met. Under the basic, we would see that consideration is the major part. There should be consideration and it should be in the course of business or the furtherance of business. These things are not in for the import of the service. Now the things, schedule 1 and the schedule 3. Few list has been given under the GST. Under the schedule 1 and the schedule 3, they have to mandatorily, these would be deemed as a supply and tax would be levied. So like few of the examples of the schedule 1 and the schedule 2 are: if someone has deregistered but still hold the goods, then it deems to be supply and have to pay the GST. Supply of any branded service. by aggregator under a brand name or trade name owned by him. So if a aggregator is supplying any branded service under his own brand name or the trade name, then it would be deemed as supply, and the transaction between principal and the agents are deemed to be supply. So if there is any transaction between the principal and the agent, then it comes under the ambit of supply, and it's a taxable event and the GST can be levied. There is an exclusion: supply of the goods to a job worker would not be treated as supply. See, if the principal is supplying the goods to the agent, then it would be covered under the ambit of supply. But if the supply of the goods to a job worker, then it would not be treated as supply and no GST implication would be there. Now, if we will discuss about the time of supply, what does it mean by the time of supply? Time of supply denotes when liability to pay CGST or SGST arise. I agree. To incur the GST, it should be covered under the ambit of supply. There should be supply, but when the liability have to pay, when the liability to pay the CGST or SGST arise, when the liability to pay GST arise. Now we will discuss time of supply for the goods and the services is different. There are different provision for the goods and the different provision for the services. It's time of supply, you can think that it's similar to the point of taxation rules under the service tax, but now these are for the goods as well as. So time of supply for the goods is the earliest of date of removal or making available of the supplier. Date of removal or making available goods by the supplier. So if the goods that are required to be moved, listen carefully, if the goods which are required to be moved, then the condition would be date of removal. But if the goods cannot be moved, then the condition would be making available goods by the supplier to the recipient. So these two things have to consider. If the goods required to be moved, then this condition you have to check, and if goods are not required to be moved, then this condition you have to check, that is making available goods by the supplier to the recipient. When recipient has the access to the goods, it has been made available to the recipient, then that condition you have to check. Date of issue of the invoice, date of receipt of the payment by the supplier, date on which recipient shows the receipt of the goods in his books of accounts. So you have to check these four conditions. Either you have to check these four conditions or you have to check one this condition and these three conditions. Earliest of the following would be the time of supply and the liability to pay the taxes arise. So it's similar to the service tax, like in the service tax, if you receive the payment in the advance, then you have to pay the service tax. The same concept is there. If you have received the payment in the advance by if you receive the payment in advance, then you have to pay the GST as well. So there are the four conditions: date of removal or making available the goods by the supplier, then date of issue of the invoice by the supplier, receipt of the payment by supplier which has been given by the recipient of the goods or the service recipient of the goods, the date on which recipient shows the receipt of the goods in his books of accounts. Whichever is earlier, then the time of supply would be that point. Time of supply of the service is earliest of following. So time of supply of the service would be date of issue of the invoice or the date of receipt of the payment if invoice is issued within the prescribed period. This condition is same as earlier in the service tax. If the invoice has been issued within the prescribed time limit, then the time of supply would be the date of issue of the invoice or the date of receipt of the payment, whichever is earlier. Now, date of completion of the service or the date of receipt of the payment if invoice is not issued within prescribed time. This condition is also similar to the service tax. In the service tax, the point of taxation arise When the invoice is not issued within the prescribed time, then the date of completion of the service or the date of receipt of the payment, whichever is earlier. The same thing is in the GST. And now the third condition, which was not in the service tax, but now it's in the GST. Date on which recipient shows the receipt of the service in his books of accounts, where the above provision does not apply. Where these, in the exceptional case where these two provisions cannot be applied, then this would be applied. The date on which the recipient shows the receipt of the service in his books of the accounts, where the above provisions does not apply. The thing in the goods, you have to check all these four conditions, and the earliest of the following would be the time of supply. But in the service, all these are the three independent cases. Please be mind that all these three are the different cases. Each point give you a different time of supply, and that would be a time of supply. You don't have to check in these and the earliest of the following would be the time of supply. Only this line will give you the time of supply in case the invoice has been issued in the prescribed time period. This will give you the time of supply when there is invoice is not issued within the prescribed period. But this one is in the when these two conditions are not met, or the time of supply is not cannot be identified from these two conditions, then you have to check with this one. Time of supply under the reverse charge would be earliest of the date of receipt of the supply. So it's a point of in the reverse charge you will see from the point of receiver. So date of receipt of the supply, or the date of payment made by the recipient, or the date of receipt of the invoice, or date of debit in the books of accounts. Earliest of the following would be the time of supply for the reverse charge mechanism. So recipient of the goods or the service have to pay the taxes accordingly. This is common for the goods and the services. This was for the goods, this was for the services, and the another one was for this one is common for the goods and the services. So earliest would be when he received the goods or the service, the date when he make the payment, date on which he received the invoice, the date in which he debit in the books of accounts. Earliest of the following would be the time of supply. In addition to the above, there are provisions to determine the date of supply in case of continuous supply. So there are few more provisions relating to continuous supply of the goods as well as continuous supply of the services that we would discuss in our upcoming videos when we will have the detailed analysis of each and every aspect of the GST. In those we would have the one video for the time of supply, and in that we would explain and we would discuss each and every aspect in detail. Value of taxable supply. Value of taxable supply means the value on which GST have to be charged. It's important. If you would not be able to find out the value, then how can you put that GST percentage on an amount? So you should be known about that amount. It's valued taxable supply. If you have sell the goods of 100 and the GST rate suppose 10%, then the 10 rupees is the tax amount. 100 into 10% equals to 10. So this 100 rupees is the value of taxable supply. So how you would find that this one is the value? So there are the provisions. Normally the transaction value would be the value of taxable supply. Transaction value is the price actually paid or payable for said supply of the goods or the service. Either it can be already paid, or it can be the case that it would be paid in the later. But if the transaction has been decided, then that is the value of the taxable supply, and you have to pay taxes accordingly. Where supply and the recipient are not related and the price is the sole consideration, these two conditions also to be met when we are saying that transaction value should be the value of taxable supply. So the thing is, value of taxable supply normally would be the transaction value if supplier and the recipients are the not related. These should be the not related parties, and the price is the sole consideration. There should not be any other consideration for that supply. And the transaction value include, what does it mean by this transaction value? So they gives you the idea about this also. The transaction value includes amount that supplier is liable to pay but incurred by the recipient. Any amount that the supplier is supposed to pay, like if any of the component or any of the service used by the supplier that the supplier is supposed to pay for it but the recipient paid it, then also it would include under the transaction value. Otherwise, what would happen if you gives order for a product for the 100 rupees at the price of 100 rupees, and the supplier will say no, 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 you can pay the obligation of my 20 rupees and I will charge you 80 rupees, and then the tax would be levied only on the 80. No, that 20 rupees would also be included in the transaction value. Value of goods or the service supplied directly or indirectly by the recipient free of charge or at the reduced price. If any goods or service supplied by the recipient to the supplier of the goods or the service, either it can be free or at the reduced value, then that amount will also be part of the value of taxable supply. If recipient supplied free of cost, then the whole value of the goods or the service would be part of the value of taxable supply. Or if he supplied the reduced price, then the amount that he has not taken or he takes the lesser value, like if the 100 rupees goods he supplied with the 20, then the 80 rupees, this would also be included in the value of the taxable service. Royalty and the license fee that recipient of the supply must have to pay. If the recipient of the supply have to pay any royalty or the license fee, then this will also include in the value of taxable supply. Any taxes, duty, fee, charge levied under any statute except CGST, SGST and the IGST. If there is any tax CGST, SGST in the IGST, then it would not be part of the value of taxable supply. But if any other taxes, the duty or the charges has been levied, then it would be part of value of taxable supply. Any incidental expenses, any commission, packing or any other charges incidental to the supply would also be part of that value of taxable supply. If the goods was for the 100 and he has taken 20 rupees for the packing from the recipient, then this 20 rupees will also be part of the value of taxable supply. Subsidies provided in any form or the manner linked to the supply. If any subsidy has been received by the supplier, like if I will give you an example, there is an goods of rupees 100 rupees, but he received the subsidy of rupees 18. Now he is selling it for the 20. No, tax would be levied on the 100 because its actual cost, its actual selling price would be 100, not the 20. 20 is because he has taken the subsidy of rupees 80. So subsidy is given for the particular benefit, but it cannot reduce your GST liability. Reimbursable expenditure. If any expenditure which is reimbursable, which he will reimburse from the recipient of the goods or the service, then this would be included in the value of taxable supply. The another thing, discount or the incentive that may be allowed after the supply has been effected. If supply is already made and now after it you are giving any discount or the incentive, then that would not be reduced from the transaction value. This would be the part of transaction value in itself. Why? Because that may be due to any of the reason. If you are not able to recover any amount, then you are saying, yeah, it's the discount. No, discount and the incentive should be decided at the time of supply, not after the supply. If discount and the incentive is in the bill, already mentioned in the bill, then yeah, definitely that would not be part of the value of taxable supply. It would be reduced from there. And the one more thing, discount and the incentive can also, if they are allowed after the supply, then in a particular case, it may be possible that would not be part of value of taxable supply. When there is specific condition that has already been part of the supply, if buyer and the seller says, yeah, if you will meet this condition, then I will give you the 10% discount. It's not mentioned in the bill, but there is a contract, and in that contract this fact has been mentioned. It has been previously decided that if this condition would be met, we would give you the discount, we would give you the incentive. Then in that case that will be reduced from the taxable supply. But there was no such condition, and the later these guys would supplier give the additional discount and the incentive, Yeah, give it, no problem, but that would not be reduced from the value of taxable supply, and the GST would be paid on that incentive and the discount as well. Now come to place of supply. Place of supply is also important. How it can be important? Because place of supply shows where the supply has been made. If goods has been sold in India, then the place of supply is relevant. If you are selling it to the another nation, then GST would not be levied. But if so, place of supply give the idea where the supply has been made, where the goods are delivered. So now let's start with the place of supply. The place of supply of the goods is the place where the goods are delivered, except in few cases. In few cases, it may be different from the thing that where the goods are delivered. The place of supply of the service to a registered person is the location of such registered person. For services provided to an unregistered person, it is the address of the recipient, and if it is not available, the location of the supplier of the service. There are various exceptions provided to these principles, such as service pertaining to immovable property, training and appraisal, admission to the events and organization of the event, transportation, telecom, financial service, etc. So place of supply for the goods and the services is different. This one is the place of supply for the goods, and this one is the place of supply for the services. Place of supply of the goods would majorly would be place of supply of the goods would majorly the place where the goods are delivered, except few exceptions. And for the supply value for the place of supply of the service, if the supply of the service is made to a registered person, then the location of such registered person would be the place of supply. But if it is made to the unregistered person and the supplier have the address of that recipient, then that address, as per that address, that would be the place of supply. And if this address is not available, then the location of the supply of the service would be the place of supply. And there are various exceptions to these rules also. These 3 points are the common points generally applicable, but there are few extra provision, like in case of immovable property, place of supply would be the where the immovable property is exist or going to be exist in the near future. And there are few more examples we would discuss in the our upcoming videos in detail, and that will take a little bit time also. So one more thing that I want to say, the place of supply will decide which state would get the amount of SGST, the component of the SGST. That's why concept of place of supply is important. So as per this place of supply, the amount of the GST would go to that government. That's why place of supply is important. Now start input tax credit. What does it mean? It's the credit of the amount of the tax that we have already paid at the time of purchasing inputs, capital goods, and input services. Input tax credit shall be credited to input credit ledger. This input credit ledger is the online portal that will be maintained by the government, in which the amount of the credit would be shown. The GST law provides for credit of the GST paid on all the inputs, capital goods, and the services, bearing some exceptions. Generally, GST law would provide the credit of the input, capital goods, and the service, but there are few exceptions in which credit would not be allowed. The exceptions include the service received and used by the employee. The thing, if your employee is using any services or consuming any goods, then its credit would not be allowed by the employer. And also the vehicles. Generally, credit of the vehicles is not allowed, but when they are used for the specified purpose. In the GST, normally the credit of the vehicles, amount of the tax at the time of purchasing a vehicle would not be allowed, but there are few purpose. If vehicle is used for that purpose, then input tax credit would be allowed. Supplies receipt for execution of the works contract for construction of immovable property except plant and machinery. If we receiving any supply, if we are receiving inputs, capital goods, input service for execution of the works contract, and that works contract is regarding construction of the immovable property, then we would not be able to get input tax credit on the supplies we have received. But if these supplies are regarding for the execution of the works contract that pertains to construction of a movable property or that relates to any movable property, then we would be able to take the credit of the input tax that we have already paid. Although if the works contract relate to immovable property and that immovable property is the plant and machinery, then we would be able to take the credit. So in crux, we can say the supplies received for the execution of the works contract for construction of the immovable property except plant and machinery would not be able to take the credit of input. Supplies used for the personal consumption are also ineligible for the credit. The inputs or the goods we purchased, if we used that supplies for our personal consumption, then we would not be able to take credit of that input tax we have already paid, because in the indirect tax burden is on the final consumer. If you are consuming the goods, then you have to bear its tax. That's why they are not allowing you the input tax credit. Another major thing is 100% credit on the capital goods is allowed in first year in itself. There is no concept of 50% credit in the first year and the remaining 50% credit in the second year. Whole 100% credit would be allowed in the first year. There are few procedural requirement also under the GST that you have to comply with for taking the credit. These are: first, possession of the tax invoice. You should have the possession of the tax invoice, then only you will be able to take the credit of input tax. Possession of the tax invoice and then goods service has been received. For taking the credit, you must have received the goods and or services. Tax charge is actually paid to the credit of appropriate government. This line was not earlier in the service tax, but this has been included in the GST. It's a little bit harsh because this says if Mr. X sell goods to Mr. Y for 100 rupees and the amount of the GST is 10 rupees, Mr. Y paid 110 rupees to Mr. X, then Mr. Y would not be able to take the credit of this 10 rupees until and unless Mr. X deposit the same with the government. So if Mr. X default in payment of the tax, then Mr. Y will have to bear the impact. Now come to fourth point, furnish the tax return. Supplier have to furnish the return. Until and unless he will not furnish the return, the buyer or the recipient would not be able to avail the credit. The time limit for com- the time limit for claim of credit is 1 year from the date of invoice. This thing was already in the service tax and this thing is same. But for claiming the credit, there are two more conditions. In the GST, there are three conditions, three time limits within which you have to claim the credit. The maximum time limit is 1 year from the date of the invoice. If we are considering about the earlier service tax, there was only one condition that we can claim the credit within 1 year from the date of the invoice, but there are two more conditions. Let's see. No credit pertaining to a financial year is allowed to be claimed post filing of the return for September of the next financial year. What does it mean? It says that you would not be able to take the credit if return of the September month following the financial year has been filed. So if you have the invoice dated 25th March 2016, okay, and you have not claimed the credit up to filing of the September month 2017. Let's assume that he have filed the return of September month by October 2017 and the date is 20th October. Okay. So for the invoice dated 25th March 2016, if he had not claimed the credit up to 20th October 2017, that is the return of the month of September next following the financial year from which the invoice relates, then he would not be able to claim the credit. Third condition, filing of the annual return for the year to which the credit pertains. Third condition is normally ACC have to file periodical returns monthly or the quarterly, but they are required to file annual returns as well. So if the annual return of the financial year pertaining to which invoice belongs have been filed, then you will not be able to take the credit of that invoice. It means that the invoice relates to, let's example, if the invoice relates to financial year 15-16 or the 16-17, let's assume the invoice relates to financial year 16-17 and the annual return of this year has been filed, then he will not be able to take the credit of that invoice that relate to financial year 16-17 if annual return has been filed for that year. So there are basically three conditions. First condition is 1 year from the date of the invoice. Second condition, filing of the return of the month of September next following the financial year invoice pertains to. And the third condition is filing of the annual return for the year to which credit pertains. So these are the three conditions and the date which comes earlier would be the last date of claiming the credit. So if we consider the second case, like the invoice was relating to 25th of March 2016 and the return for the month of September 2017 has been filed by the 20th October 2017. Although 1 year has not been expired, but this date would comes earlier, then this would be the last date of claiming the credit. If he has not claimed the credit up to 20th of October, then he would not be able to credit of that amount. Now come to the concept of input service distributor is continued in GST as well. However, credit of GST paid on input of the capital goods cannot be distributed. As the name suggests, input service distributor. This concept was also in the service tax, the same concept in the GST, but the input service distributor, it says input service distributor. It can distribute only the input services. It can distribute only the credit of the tax that has paid at the time of input services only, not on the inputs in the capital goods. Input tax credit can be utilized as follows. We know under the GST there are three sort of taxes: SGST, CGST, IGST. SGST means state GST, CGST, central GST, IGST, integrated GST. When we make a sale of intrastate, then there would be two component of tax, SGST and the CGST. The credit of the SGST can be utilized for the payment of CGST and the IGST. If we made a purchase of rupees 1000 on which let's assume SGST was 100 and the CGST was 200, let's assume only. Yeah. So at the time of sale, if we have the obligation, if we made an intrastate sale and we have the obligation of SGST of 120 and the CGST of 300, let's assume the CGST on the output was 300, then we can claim the 100 rupees of the input credit pertaining to SGST as against the 120, and the 200 input credit on the CGST against the 300. Okay, so we can claim the credit of the SGST with only the SGST and the IGST. IGST is integrated goods and service tax that would be levied in case of interstate transactions. So if we made a interstate sale and the IGST is rupees 1000, amount of the IGST is 1000, then we can claim the credit of 100 that we have paid on SGST for the payment of liability of 1000 rupees. Credit of the CGST can be used for the payment of CGST and IGST. In our example, we have the input credit of the CGST amounting rupees 200. We can take its credit for the payment of CGST as well as IGST. Credit of IGST can be used for the payment of IGST, CGST and SGST. If we made the interstate purchase and on that purchase we paid 1000 rupees as IGST, we can take the credit of that IGST against the sale, against the interstate sale as well as the intrastate sale, and we can claim the credit against the CGST, IGST, SGST, all three. In crux, we can say we can claim credit of any tax with another tax, except CGST cannot be used for the payment of SGST, and the SGST credit of the SGST cannot be used for payment of CGST. This one is the only exceptions. Otherwise, we can take the credit in any manner, vice versa, except this condition that the credit of the SGST cannot be used for payment of CGST, and the payment of the credit of the CGST cannot be used for payment of the SGST. Now, if we talk about the returns, the various returns that the assessee have to file. If we are talking about the periodical returns during the year, then normally assessee have to file monthly return, and the time limit is 20 days from the end of the month. All these limits are as per the GST model law. So registered taxable person, except the three categories that mentioned below, they are required to file periodically monthly return within the 20 days from the end of the month. If the assessee is in the composition scheme, assessee can claim the composition scheme if the aggregate turnover is less than equal to 50 lakh rupees and he is not going to for interstate supplies. So the person having the composition scheme cannot sell the goods or the supply the services interstate, and the amount of tax would be minimum 1%. So the assessee who opted for the composition scheme have to file the return quarterly, and the return filing date is 18 days from the end of the quarter. Required to deduct TDS. Assessee who are required to deduct the TDS. They are the provision of TDS and the GDS and the GST. So they are required to deduct the TDS, and they have to file the return monthly, and the time limit is 10 days from the end of the month. Input service distributor, they also have to file the return monthly, and the time limit is 13 days from the end of the month. Every taxable person except few categories shall file annual return on or before 31st December from the end of the financial year. The taxpayers having turnover exceeding the prescribed limit will also be required to get their accounts audited by the chartered accountant or the cost accountant. There is a role of chartered accountant or the cost accountant. If the turnover of the CC exceed a prescribed limit, they are required to get their accounts audited by the cost accountant and the chartered accountant, and submit a copy of the audited annual accounts with annual return. to the department. In addition, they would also be required to submit a reconciliation statement reconciling the values of the supplies declared in the return. They would prepare a reconciliation. It's a reconciliation between v- value of the supplies declared in the return as well as what shows in the books of account. Thank you guys for watching our video. Now you get all brief terminology about GST. In our upcoming videos, you will find detailed analysis of each and every aspect of the GST. Please subscribe, share and like my channel. See you in next. Bye.